Have you ever found yourself sitting clueless in social gatherings when people start talking about the ABCs of the stock market? Say no more to awkward silences. Welcome back to our channel, folks. We are back with an interesting topic for all the stock market novices out there, that is, a beginner's guide to understanding the stock market. Well, in the simplest of terms, stock market is a giant marketplace where people buy and sell pieces of companies. It's like a real-life version of the game Monopoly that I bet you have had fun with. The difference here is that you have grown up, and the pieces of companies that you will be buying and selling with your hard-earned money would be real businesses. Also, the information that is present on various platforms can look overwhelming and borderline scary, especially if you're a novice. In this video, we will cover everything from stocks and shares to the various types of markets. So let's get started. Let's start with stocks, shall we? Remember when we earlier talked about owning a piece of a company? Well, stocks are nothing but a representation of your ownership in that company. When you buy stocks in a company, you become a shareholder in it, and you might as well get certain benefits such as voting rights in the decision-making, the potential dividends, and the obvious thrill of seeing your investments multiply or grow. But there's always a but when it comes to the stock market. Stocks can be unpredictable in nature, just like every other episode of GOT. They can rise, which means your investments are growing, and they can also fall, which means your investments are shrinking. So it becomes extremely important to do proper research, remain informed about market trends, and not indulge in panic selling when the market starts looking bumpy. That sounds about fine, but what are shares then, you may ask? It's a classic confusion that many people have when they first learn about the stock market. Well, stocks are the entire ownership of a piece of a company, and shares are the individual units into which a stock is divided. You can say they represent ownership at a more granular level. When you buy some shares, you also become a beneficiary of the dividends that a company gives to its shareholders out of the profit earned. Now, just like stocks, shares can be risky too. Their prices rise and fall depending on how the company is performing in the stock market. So make sure you keep an eye on financial news. Some commonly used terms that you might have heard when it comes to the types of market are bull and bear. Don't worry, we aren't in the zoo. Let's understand what these terms mean in the context of the stock market. A bull market and a bear market are commonly used terms in the field of finance to indicate the direction and sentiment of an entire particular market. A bull market refers to a market condition in which prices of stocks are generally rising over an extended period of time. Usually, feelings of optimism, investor confidence, and expectations of further price increases are high during a bull market. There is typically high buying activity. They can last for months or even years and may experience periodic corrections or pullbacks, but the overall trend is upward. What does this mean for a novice investor like you? A bull market can pose certain challenges, but it can also give you some great opportunities. A bull market can usually lead to the overvaluation of some companies. You might feel like investing in them, but you need to make sure that the company is safe and has strong fundamentals before investing in it. You should also make sure that you stick to your long-term goals and do not get distracted because of market fluctuations. Let's talk about the bear market now. A bear market is the opposite of a bull market. It represents a market condition in which prices of securities such as stocks are generally falling or experiencing dragged-out declines. Usually, during a bear market, negative sentiments such as pessimism are soaring high. During a bear market, selling activity tends to dominate. They are often associated with economic downturns, weak corporate earnings, and unfavorable market conditions. They may have periodic upward movements, but the overall trend is downward. During a bear market, a new investor might face some unique challenges. Usually, during a market downturn, people panic and indulge in panic selling. You need to stay calm and understand the fact that it is common for markets to slump down for a bit. You should also continue with your regular investing practices, as a bear market provides you the opportunity to buy shares at a less and discounted price. This might also help you with your long-term financial goals. So make sure you keep an eye on financial news. We are done with understanding the very basics. Now let's understand what sort of necessary precautions one needs to take while indulging in this real-life monopoly. When it comes to the stock market, your investments can either soar high up like a bald eagle or take a nosedive like a first-time skydiver. A set of precautions and stop the latter from happening. First and foremost, make sure that you are well researched. Understand the financial health of the company you want to invest in, and try to surf through various pieces of information about that company. Knowing if they have a promising future or if they are going to plummet is important if you are planning to invest your hard-earned money into something with the expectation of seeing that investment grow. Secondly, do not put all eggs in the same basket. Risk is always a factor you need to keep in mind while investing, and minimizing that risk should be your goal. This can be achieved by diversifying your investments. That is putting your eggs in different baskets. This can be done by investing in bonds and mutual funds and in a variety of sectors and industries. So if one of them plummets and the other one goes up high, you won't be in a situation where you end up losing your principal investment amount as well. Lastly, you need to understand that seeing your investments grow can be a lengthy process. It needs patience and discipline. Many times you might as well hit some bumps here and there, but they are a part of the learning process. Do not get discouraged easily. Take your time, keep learning, and keep making informed investments, and the eventual results would be positive. So now that we have dipped our toes in this vast pool of knowledge regarding precautions and the basics, we can move ahead and know how does one start investing. First and foremost, make a proper investment plan. Understand your income sources and your expenses, and try to get to a sum that you can use to invest. Also, it is important to set certain small and long-term goals regarding your investments. Staying on course towards achieving those goals is extremely important as well. Make sure that you do not get distracted because the stock market can be a roller coaster ride. Next, you need to decide what your risk tolerance is. Do you want to go all in the first few days and take the risk, or you are more of a play it safe kind of person? Remember, there is no right or wrong answer here. Go ahead with what suits you the best. Now you need to open a brokerage account. Find yourself a user-friendly platform that is suited for beginners like you. While making these accounts, the platform will ask you about your investing goals. Usually, for a beginner like you, a perfect goal would be to increase the amount of money in your account. Goals can change over time. You need to make sure that you review and define them from time to time so that you can keep your motivation and focus high. You also need to remember that there will be some commissions and fees that your broker, that is the firm or platform that you are using to trade, will collect from you. After all, the broker needs to make money as well. These commissions are taken over every trade that you make, thus also limiting the number of trades that you would like to make. And finally, remember that the stock market is as unpredictable as a Gemini's behavior. There will be ups and downs, loss and profit, but you need to keep your calm and believe in your strategy and the long-term investing goals that you've set up. There you have it. The simplest guide to the stock market. I believe your engine has gotten a perfect head start and now is revving for more. Well, keep researching and remember that the stock market is a mystery box. You will never know what you're going to get unless you decide to open it. But isn't mysterious just a synonym for interesting? Get on with your adventure. And before you hop on to some other piece of info, make sure to subscribe to our channel, like the video, and share it with all of your friends and family who want to learn about the stock market. Happy investing!